The close near session lows, the S&P 500 off about 1.5%. The major averages all on track to post weekly losses after a big bounce last week. Barb, how are you thinking about the setup here? I mean, obviously you could say, well, we're 8% off the lows in the S&P. This week was just kind of choppy on the downside. On the other hand, it's hard to see where we're going to get an all clear from the main concerns of inflation, Fed, and at least some slowdown fears.
Yeah, Mike, you captured it perfectly. I mean, as you know, we've had five big rallies this year from the beginning of the year. Four of them failed. Market went to new lows. This is our fifth one. We've had up 10% X today, up 10% in the last 10 days. And is this going to be another failed rally? I think none of us know, frankly. I mean, we're watching. We're all data dependent at this point, just like the Fed. We're looking at the inflation numbers. We're looking for signs of demand destruction. Like the jobs number this morning was interesting, quite interesting. The market did not react well to it because I think there was a secret hope it would not be good and it would mean the Fed doesn't have to be as aggressive. But there were signs of hope in that inflation, I think inflation is much more likely to decelerate from here than to accelerate. And we're seeing all sorts of little hints about that. I mean, one of the things with the average hourly earnings, when you look at the last 4 months, they're only up 3.7%. And year over year, it is coming down. And that's an important component of inflation. So basically, until we see more come in and we see how the summer goes, it's just going to be choppy and in a trading range. But my bet is we do not test the lows like we did previously. And that's because where sentiment is, where valuation is, 17 versus 23 PE, and positioning. So in the market.
Yeah, absolutely. Folks definitely are playing defense after this run of negative weeks before last week. I guess in terms of individual types of stocks that might have become more interesting here, you know, the NASDAQ did have a 30% drop peak to trough. You had the average stock in the S&P down 30% from a high. So are there particular themes that have come up that you think make sense here?
Well, you know, it's interesting. A lot of people are still playing energy. And of course, but energy's up in general 60% this year. And hard to know if that trend continues. I wouldn't be going there. But I think a lot of people are talking about this. There's a lot of mega cap growth stocks, which I have owned and had written down, you know, sadly, through this. But a lot of them are down much more attractively in terms of their valuation, because it's really been about a valuation reset, not because their fundamentals are broken or changed. For instance, yesterday, Microsoft. Where was their guidance was about currency reserves and the impact there. That's not a fundamental issue for them. You know, that's maybe a 1 or 2 quarter issue. So there's opportunities like that have been opening up all along. So I think there's a ton of opportunity in the growth names, which once the smoke clears, whenever that will be, you can make a lot of money going forward.